Well, hello everybody. Welcome to, of course, our weekly webinar series. I just need to close off that sound. There we go. Welcome very much. Thank you for joining us. We'll be covering off on everything to do with the commodities and Forex markets, as well as stock markets, indices, and cryptos today as much as we can. My name's Thomas Atkinson. I'm joined by Tyron and Bella over here at FX Evolution. Tyron, how have you been, man?
Hi, everyone. Yes, and welcome to the stream. Yeah, boy, oh boy, we've seen some really good market action this week. I reckon we've had some fantastic trading opportunities on the scalp on a few of the majors, and even the dollar index is playing the game. Gold has just been a bonanza. We've been talking about it for weeks, and it's certainly fulfilling its potential now. So if you were scalping and you were following the scalping opportunities, you haven't been hard up for any opportunities this week. So we'll definitely get into some of those and see what else is in front of us for the rest of the week.
We'll start off here with, I guess, the DXY. So we'll start off with the US dollar. It's declining here a little bit in today's market action. Now, we've talked a lot about 95.80 last week being a bit of a key critical resistance. In the video of yesterday, I kind of warned against this zone tie just because I think it was getting a little bit too close to that resistance. What's the point of holding it through there when you've had so much resistance selling and all sorts of things, a lot of kind of problems in that zone. So we move over to the 2 hour and the 1 hour. What are your thoughts here pulling back into something like a 95.80 for DXY? Is this going to be a trade that has potential around this area for the pickup, or I think it's already done it once before?
Yeah, look, you know what? It's done what it has done. I probably wouldn't mind it stopping where it is right now. I don't know if I want it all the way back down to there. I think I'd rather it at that sort of 96 level. And that's mainly because it's sitting right on the 50. If it gets back down there, I start to worry that it's pulled back a little bit too far. Like that's, it's a bit of a failure in my point. If it goes from here, I would say, well, you know what, it's still doing a sequence of higher highs and higher lows that we're very comfortable with, and the pullbacks aren't too aggressive. But if it goes back all the way, sort of that 95.80, I know it seems like only a small move down from where it is now. And although it is a role reversal, you'll probably you may get a scalp from there and maybe push up to the highs where we are now. But I'm not so sure it's a good launching pad to break the 96, 50 area, which is what we really want to see. We want to see a break of the big zone. But if we turn around here and we see a sequence of high highs and high lows on even on a 4 hour or a 1 hour from this point, and we attack that high again, I think that we've got a better chance of breaking through than if it pulls all the way back to 95. I think they're two different trades. If we go down to 95.70 area, I think we're probably scalping up to basically 96 or 96.10. But if it turns around from here, I think we're attacking the high again and potentially going to break it this time, because at that point, it looks like a very orderly sequence of higher highs and higher lows. That's what I like to see. That pullback just gets a little bit deep at that point to attack the new high, but it could give us a scalping opportunity, no question.
Yeah, I think the problem with this is just how do we also even get in here? Like, I mean, we've got we've had this big rally already off this point, and what are we looking for? I mean, are we going to get a lightning bolt here? Are we seeing some strong signal? And I do find that the tough part here with the DXY. So we'll move over to the euro. I agree that it's a little bit of a tough trade. It has to kind of move here. You don't want things coming back to the role reversal all the time, everyone. It's not really great. And I think the euro is also in a tough spot. No matter what you're really looking at, yes, we've had that bullish kind of flow through. It looks like the DXY is weak, but as we know, DXY is on theoretical support. So again, I'm not sure if the euro is the best trade here either, Ty, at the moment.
It's not the best trade until it proves itself for mine. Look, it's a 38.2 fib of that move. There's no question about that. And that was a recent high. And it is sitting right on the 20 and right on the 50. And a lot of people will get sucked into thinking, let's just automatically short it from here because it looks like it's in the zone. Yeah, absolutely, it's in the zone. And it's also at a role reversal point. If you look at the to the left-hand side, you'll see that there's two very equal peaks there at the edge of the screen where we are at a role reversal point. But this is where people come unstuck, because they're just going to look at that and automatically think, yes, this is the sell zone. We're at a crucial point in the market. So what I want to see here is a 15-minute change of trends the way down. If we get a 15-minute lightning bolt on the way down, absolutely looks like a great trade. Very, very different story. But right now, it's not an automatic short, even though it's setting up for that. The lightning bolt is what you want to see. You need momentum to actually show the flick and actually respect the zone that it's at. It's at an important zone, no question about that. And if you were really, really hard up on time and you just had to place a trade before you went to work or before you went somewhere, well, I mean, you could do it, but it's at that point, it's a bit of a riskier sort of trade. You're not really giving it the absolute optimum chance because momentum hasn't flicked yet. But if momentum flicks from here and starts to get down below those moving averages on a 15-minute chart, and you see a lightning bolt down, and it wouldn't take very long to do that. There's 70 or 80 pips of pretty easy money coming your way. I would have thought I'd be certainly taking that trade if it does what we want it to do at this zone. But it's not a jump in and set and forget, not by any stretch.
No, and I think it doesn't matter really what currencies we're looking at the moment. We'll just quickly, briefly go through a few currencies. They're all at kind of tough points. Odd relatively looks, I guess you would say, partially maybe bullish, but again, not really feeling it. Let's have a look at some other yen pairs. Pound yen coming off a support. Maybe that's got the trade in it. I mean, let's have a look at some other yens here. These are the ones that I'm looking at. More the yen pairs this week. And even if you look at US dollar yen, there's a rejection wicks across the board here. This is on the daily, followed by potential follow through. So it doesn't matter which yen we're looking at. Let's say the odd yen here. Look at this. Rejection, nice bullish pickup here, and then possibly a follow through after a double rejection back. So think about the psychology coming into this. There's a lot of fighting here where people might have accidentally bought this one on the close thinking, oh, it's going long. They've gone through the trials and tribulations of not waiting for the follow through, and we're just seeing the follow through in today's session. So what are your thoughts here on these ones? Because when I go through the timeframes, these are the ones for me that looks a lot better. We've got lightning bolts to the upside, 4 hour, plus all these other things.
Yeah, I see on these ones exactly what we're waiting for on the others, except these ones are actually doing it. And I think that's probably the important thing. Like, these ones are actually providing the lightning bolts off those levels that we're talking about and looking strong, no question about that. I like them both. I mean, the two examples that we've looked at, both of them are kind of doing exactly what we need them to do. And the continuation is solid. Like, we can get a decent trade here. You've got a pretty reasonable move up. We've had a lot of trouble in front of you, and you've got to respect that. And they're the trades that we're always after. Remember the number one rule is your entry point and you take profit. And these are the ones that have got the clearest sky at the moment, and they've already got the momentum, switching. So you've got to like them. They've broken the key zones. Other ones are still a bit of a watch and see.
Yeah, I really like the price action here on the yens. I feel like they're the best. So if I was to look at any of them, the yens would be the way to go for the next couple of days. And we've got a question coming in here from Gary. He says, can you explain why Forex matters? Well, Forex is the currencies of the world, so it's all central bank policy, really. Not being disrespectful, genuinely asking for knowledge, does it have any influence on other markets? Look, the dollar index will have influence, but realistically, they are kind of trading their own ways. Think of them as really just central bank policy just being priced in each way. The Forex market won't show you necessarily a inkling of what's going to happen in the stock market. They are separate from that action, and they don't really have a fair value. So you've got to always think bull or bear. You don't have really an opinion on. You're always neutral, aren't you, Ty? You don't really have too much of an opinion unless you have a strong monetary policy idea, and realistically, most people get that wrong, don't they?
So, no, that's 100% right. Yeah, exactly. Yeah,
better just to follow the price action in Forex. It's the ultimate price action trade, and leave your opinions at the door. Okay,
it's a lot harder. Yeah, look. The best way to describe it is there's a million different components that make a currency move up or down. You can't possibly be across every component. Every bit of news, every single fluctuation that makes currency go up or down. So in my mind, it's almost pointless trying. But what you do maintain is that neutral view. And when we say neutral, we're not saying it's not going anywhere. When we're maintaining a level of, if it goes up, we'll buy it, and if it goes down, we'll sell it. It's not like a stock where you say, well, you know what, fundamentally, this is a strong stock. This is a strong sector. This is what we should be. It should be going up. Why is it going down? Thomas, why is it going down? I can't explain it. In currency, it doesn't matter as much. So in currency, we maintain a neutral view in that we do exactly what price action dictates. And generally, you're going to get a pretty good result. And that's why we love it, because you're going to get trades no matter what the market is actually doing. I think that's the important part, definitely.
You do get a lot of opportunity, which is pretty important. So let's move over to some other markets. We've got questions coming in here about indices. Yes, we'll cover indices very soon. By the way, we've got 70 plus people here. If you can give us a like on the stream, if you enjoy our content, please do. It does help us out with the algorithm, and we always appreciate all of you guys out there. If you like this time as well, let us know, because we're kind of playing with different times. We always run these during the midweek. But we usually do them at the night in Australia. So let us know if you prefer this time, and we'll see if we can do that. Let's move over to some others, Ty. We'll just quickly scroll through some commodities. I've said this to the community quite a few times, and I'll say it again. Just be careful here in oil. Oil's fluctuating more on news in the Ukraine at this point. And just remember, weekly 20 is too far away. So regardless of the price action, that's a huge deal. And also look at the 4-hour 50 exponential, because that's held up this trend all the way over since this point. And this to me looks like a little double top. I'm not liking oil right here, Ty. I kind of called the top for it at 92. I know it can keep going up. Anything can happen, but I don't like how far away it is from the weekly. And we've learned before that this is the type of thing where we just go, you know what, chill back. We'll come back later on.
100%. And the thing with oil at the moment is it's being driven by something that we have absolutely no control over. I say we haven't got control anyway, but we can't even put a price point on it that makes it fair. We can't do anything because it's being driven by something that's out of everybody's control. It's not even in OPEC's control at the moment, right? That sort of drive worries me for the long and for the short, by the way. Not just it could do anything. So it's one of those ones that's interesting to watch, but I don't pay it as much attention. Just like Thomas said, when we're in a very, very uncertain and unpredictable time, you sort of say, well, the technicals are there, yes, but are you going to give them a lot of weight? No, because you know what? A support line or a resistance line can be absolutely smashed by the firing of a cannon.
Yeah, well, that's right. Anything can happen here. So we've got like a little double top. We could break through the 50. If you want to take shorts, I think there is capability of doing so. It's a riskiest trade based on the bullish momentum. But yeah, 50 exponential moving average has been the hold, and that's a little double top at this stage. Move over to silver. Silver took a hammering overnight and broke down, but then it's rallied back up. It's right where you hope it rallies. I won't mention too much about this because we'll move over to gold, but basically that was still a fairly bullish close here for it. And I'm still bullish on silver to the upside. I don't
but
think
it had an initial target anyway. Like it got to our initial target. So it's not like we're going to be too worried about this. Yes, it's got more in it, but realistically, we'll say it's 1 minute, so it's silver. Like we were aiming for that 2380, 2390 area. And realistically, it's probably got more in it. I agree. I think it can definitely bounce from here. If gold's on its way up, silver's going to go with it. But it hit the zone that we thought this is where it's going to run into trouble. So realistically, you probably should have taken profit at that point anyway if you got in on the signals that we discussed last week. Gold, again, like look at it. It's just
so gold hits the resistance and then it's coming back down. This is where we need to turn around here before we get into indices. Let's quickly talk about gold. I like this. I spoke about it just before. Realistically, community, this is a nice base. Let's just quickly look at gold on an actual proper feed. That feed sucks so bad. There you go. It changes instantly. Higher lows, 1857. If you're looking at this for the Asian session, which often can be a good gold trade time, so we're going to enter into that now. This area here, I think, is a pretty good one, Ty. We've got previous resistance and a breakout showing us that it's important zone. We've got current resistance, a series of higher lows. If the market can bull rally here for gold and get past 1857, I feel like that is a trigger that's going to hit us into 1870 again and possibly lead to even further on. So it's one of those ones where you could descale. If you got into it and it was doing the right thing, you could descale it here. So take a little portion off for your scalp and then also leave a portion on for further move because you're doing that multi-time frame analysis. Would you agree with that?
Yeah, no, 100%. And it really works with the bigger trend. There's no question about that.
Yeah.
Like, I'm not afraid of that sell-off, especially if it breaks up. But I wouldn't be jumping in right now, by the way. Just like Tom said, we've got to get up there. It's got to jump past there. If it does that, happy days. Above those moving averages on the 15, then we've got the lightning bolt, break of a ascending triangle, like Tom said. And off to the previous highs at the very least, you'd think that'd be the first target. But I'd be looking for a break of that because on the bigger picture, on a daily, it looks like it could definitely smash past that. Like it looks like it's got 1900 in its sights.
Yeah, I think it has that 1910, which is the level after this. Remember, we go out to the big daily. 1910 is the next zone.
Yeah.
Break 1870, 1910. Break 1910, 1960. Great levels, really beautiful gap ranges within each one of them. So yeah, we'll be looking at that and hopefully we can follow it. Let's move over now to just talking about these markets. So we've got the VIX. Let's just quickly broadly look at it. The VIX has obviously declined in the last 2 days of trade. We had the Ukraine news, supposedly Russia pulling back some stuff. Yeah, okay. And then the markets pulled back up off that. But we've still got persistent inflationary concerns. We've got the FOMC minutes coming out Wednesday, Ty. And when all of these things happen, while the minutes will just be the same crap as usual, we're going to do this, we're going to do that, we're going to raise rates, we're going to, inflation this, inflation that. I don't expect much to really happen there. I think the market's going to do what it plans to do anyway. And the VIX is at an interesting point. You had like a little bit of resistance, a little bit of support. Maybe it's at a critical level for turnaround to the upside, or of course, coming back down to the 20. We don't usually TA the VIX very much, but that is where I would say it's sitting. Let's look at the 2 years. So the 2 years ready to break out. So regardless of really the discussion, I think the 2 years trying and ready to break out. And when we move over to the 10-year, you'll notice that's also trying to break out. So in the next 24 hours, we're going to get the action here on these. If these obviously drop off, then we might see that break, which we'll look at when we look at the US 500 and QQQ. We might see the break to the upside. All of a sudden, these fall off, Ty. The market moves up, feels positive. If this breaks to the bull side, I would say we look to the next leg down. And the main reason, US 500, it's at the level of previous resistances equaling support, and it spent the whole day channeling. So the entire day of trade, even though a lot of markets were going up and down, it's channeling on a 15-minute. This is waiting. It's a coil, and I'm not sure on direction, and I don't think you are either. Maybe, I don't know. Have you got a bias here? I'm not sure, but
I actually don't.
I don't know.
I think it's at that place now that I would trade either side. I'm not concerned either side. I've definitely got an unbiased view on this now.
Yeah.
If we get a break to the upside, happy days. If we get a break to the, and when Thomas draws those candles, be very, very mindful. We're talking about a daily candle, not a 15-minute. Although he's showing it on the 15-minute, all he's doing is highlighting the 15-minute channel. But the close that we want to see is actually on a daily chart outside that channel. So just be aware of that. If a 15-minute closes above or below, we're not going to get excited. Okay, so just so you know. But if we get the daily close, you get a bit excited. If you get
scale.
Yeah. If we get a daily close though outside either of those zones, up or down, I've got no bias whatsoever as to which way it could go. And I think we've got very easy predetermined targets for both breaks. And I like that sort of trading because it means realistically, we don't care. We're going to get a trade either way because it's going to break out of there eventually, obviously. And when it does, you've got to trade either side. Sometimes if we do carry a bias where we think, oh, look, it's a bit overcooked, you're only waiting for a break to the downside. And if it breaks upside, well, you're not really going to get a trade in. You're going to be sitting and watching and waiting. But when we've got a coiling like this at a reasonably important zone, but almost a neutral zone in the grand scheme of things, it has had to pull back on the bigger time frame. It's kind of at that zone now where if it went up, it's not going to surprise anybody. And if it went down, it's not going to surprise anybody either. So that makes actually the best trading environment, really.
Yeah, I think you got to leave your opinions at the door here. You could say, oh, inflation, persistent, all these things. That's not going to necessarily fall into the next 24 hours of trade. And that's what we've seen really in the last 2 weeks. Like if you've thought, oh, it's the end of the world and sold your positions all here and then missed out on, some serious opportunities. I think we were very good as a community calling this one. We've had that role reversal pick up. We've had the short off. And like my guess here is probably, I have to be neutral, but in general, the general pattern of swing and the way markets work would point towards the short side here. That's just because that's usually what it does. It pulls back to a role reversal and then continues on. Yeah, that's the concept of markets. That just because you think that, though, you haven't seen it yet. And that's what Ty and I always say, confirmation. We don't have confirmation either way. And that's really sad. Yeah. Now, we're using the S&P 500.
And just for clarity too, sorry, just for clarity on that one as well, although we don't have a bias either way, I can guarantee you that if you pressing scored this trade, the downside trade is going to get a higher score than the upside trade because the downside's got more going for it because technically we are in a downtrend. There's no question about that. We're in a prevailing downtrend on this. and the pressing score will be a lot higher on the way down than it would be on the way up, just to clarify. Because it's at a 38.2 pullback. There's no question about that, and at a roll reversal.
Now, a few people will be looking at the Nasdaq and saying, but Tom and Ty, it broke out the Nas. We can't use the Nas as our main level of confirmation. And the problem with this is that this market is the highly volatile one. It's also reacting a lot to news and small news results. We need to use the SP 500 generally during times of high VIX to give us the biggest signals. If you want to trade the US 100 when you see the signal in the US 500, be our guest. We would say yes, because you're going to get a higher, more volatile move. But this signal here, even though it is a bullish breakout, no doubt, like you look at this and you go, oh, bullish breakout, and that's showing on the daily as well. I don't know whether you can use this over the US 500. The US 500 is showing us no. And I always go with the big one.
And it's a good thing too, because at the end of the day, it means that although they are, correlated to an extent, they're not exactly reliant on each other. And I think that's good because it gives you two trading instruments instead of one. Like if you're trying to trade, say, the Dow and the S&P 500, you are literally trading the same thing. Like there's not that much separation between the two because, generally speaking, they move effectively in sync to a degree, whereas the NAS can go, completely on its own against the S&P 500. And this is a perfect example of it. So I think it's a good thing because if they were too closely correlated, well, you can only really trade one, can't you? So, I mean, at the end of the day, otherwise you're trading the same thing. So I think it's a good thing that they have a little bit of separation because they are really generally slightly different markets. I mean, not even slightly, they're considerably different markets, even though people put them in the same basket and say if one goes up, the other one must.
So let's look at the options coming into this week so far. We'll bring it up using some of the stuff we've got in the private community. We'll obviously use the robot and bring up some option strikes here. So this is an interesting one. So this is just a SPY all someone just brought up. So I'll bring this, show you guys. So basically this is expiration date is all. So this is every expiration date moving forward, I guess, for the next year or so. And what you'll probably notice is predominantly there is a lot of bearish bets. Now, there always are a lot of bearish bets here just because they're used for covering positions and protection and all that type of stuff. But I think this probably brings up the point of what we're going to discuss, that even if we do end up seeing a fall at some point this year, I don't think it's going to be long-lived, Ty, and we're going to have to get back up to this 440 kind of area relatively quickly. And the reason why is because there's just too much puts here. There's just so many. And this is for all the expirations. I mean, these are some big numbers. I don't think it'll hold like that. But let's just bring up what we've got here for the 18th, which is this expiration this Friday. And it really hasn't changed too much. We've got a decent, still more puts being placed into the system, which I'd say is retail freaking out and continuing to sell off, which I think is a big reason why we haven't been able to see this dip go further at this stage. And we've got the 425 strike continuing to get larger and that 430 strike getting fairly large as well. So we're sitting here in the middle. We're sitting between a 440 and a 450. There's getting a little bit more calls in there. You can see that green line starting to come up, but yeah, we're stuck in the middle. Max pain, if I was going to expire this one weekly, if I could expire it around a 450, and I was the market, I would have a big smiley face. So if I could do that, but that's just looking at the options. I think the biggest thing here has been next 24 hours from the US 500.
Yeah. Here's the golden rule on options for everyone who trades them. Generally speaking, it's mainly the retail novice traders that are placing put protection to protect their position when the market turns volatile. The smart money, the real money, and they are placing their protection when the market's actually flat, because that's when protection's actually cheap. Okay, it's no point calling up your car insurance policy provider and asking for hail protection during a hailstorm, right? Because you're going to be paying 10 times more for it. You put protection in when the markets are actually flat, so it's actually cheap to put in. So when the panic puts get put in, which is when you see these big spikes, generally speaking, that's the it's not generally the smart money. Let's just say that. No, and remember that when you're looking at your put strikes.
Well, you can see that in the strikes as well that we're getting coming in over the last. When you're watching it through the week, all those strikes, as you said, usually predominantly retail traders. The big guys will be placing much further out positions.
Kevin.
Kevin's comment. Now, I don't know. We won't reiterate that on YouTube, but thanks very much, Kevin. So US 500, again, the story here is just really the big range for the day. So let's look through some of the stocks. Now, in the previous session, we messaged, or we talked about Apple being at that resistance. Now, Apple's been a strong and strange one. It's been able to break plenty of, I guess you would say, technical levels before the rest of the market. Like, I mean, this is no doubt a support. It's come up, seen it, and then just kept going. So I think Apple's been a relatively tough trade. You might say, but Tom, I just bought the dip and it's fine. Or Ty, I bought the dip and it's fine. Yeah, but I wouldn't say it's been amazing on the technicals. If we go and have a look at some of the hyper stocks, though, no matter which one we're looking at, we are looking at quite a few of these. These are all starting to base off much better than most people would expect. So we've got here ARKG showing signs of recovery. Obviously, the downward trend line, the rejection. Community, I think these ones are going to be where some big money is made, because ARKK is the same. You know, nice holding pattern. If you're patient enough to wait and miss out on the beginning, when eventually this does break through, if it keeps holding up like this, and remember, it's all about waiting for the confirmation. That's very key. The uptick, even just to 90, is a huge percentage increase. And it's highly likely when we see a base accumulation with volume like this, isn't it, Ty?
Yep. I'm going to give you an analogy that hopefully will clear this up. It's a well-known fact that aeroplanes crash mainly on either landing or taking off. Okay, so that's when a plane crashes. The safest time to be on an aeroplane is actually in the middle of its flight. And that's the same as trading. When a trend looks like it's about to start, or a breakout looks like it's about to start, that's the hardest and most risky time. And also when it's entering a place where it's getting close to a take profit, like close to a support or resistance zone, depending on which way you're going, that's also the most risky time for a potential turnaround or an accident, if you like. The smoothest and the easiest time and the less risky time is actually that period after it's broken out and as it's approaching. In other words, the meat of the trade. So that's why it's worth the risk. We talk about the, we're waiting for it and being patient, but it's effectively saying that it's almost like saying, yeah, you're a lot less risk on an aeroplane when it's actually in flight than when it's actually landing or when it's taking off. So it's the same as trading, right? When it's actually about to look like it wants to do it, look at this as a takeoff. This is at its dangerous point. This is where it could potentially crash land. Once it breaks through there, the next move is an easy move. That's actually the less risky move, the meat of the trade. So you don't want to capture the whole lot. You want to capture the easy part, the less risky part. All right. So when you're trading, think about the takeoff and the landing, because it's it's eerily similar. And yes, for all of those people, I know.
What about the turbulence?
That's not too bad. Planes don't come down to the turbulence.
I'm scared of turbulence, man. That's pretty. It's like the plane shaking, you know. Whoa.
Turbulence is fine. Turbulence won't bring a plane down.
So what you're saying is the turbulence is the small little pullback within the participation of the.
That's exactly right.
Overall.
That's a market open. Just a bit of a market open, giving a bit of fun.
Yeah. All right. Well, I think any of these hyper stocks that have been in the news, and we know that they've got relatively good earnings. Look, we had a discussion before, Ty. It was about earnings, and we've seen quite a lot of hyper stocks, obviously, very weak coming into these earnings. Not hard to probably beat the market's expectation to a degree. And we've got 2 days here till Roku. It's showing some form of support. Now, I don't know much about the business in terms of whether it's going to go well or not, but implied volatility versus, let's say, the movement. The thing about these is what they've been doing is they've been jumping, if they've got surprise, straight into resistances. And I just want to reiterate this to the community. If you're thinking of trading this and you want to trade it based on earnings, the way to do so obviously is an option. Because if you do it with the CFD or a leveraged contract and it goes bad, you're in a Facebook situation, you don't want to be there. So if you do end up doing that, think about outside of the box, whether you put like a bull call spread with the 2-day expiration up here. Do it out of the money. Do it more where your expectation is than where it currently is. Because remember, the only scenario really here that's going to be profitable long-term is getting these kind of explosive moves to the upside. And so far, the trend has been explosive. We saw today Airbnb's done pretty well. What was that other one? UPST's gone out and done it. Some of these hyper stocks that have done well have been explosive in the session. Twilio jumps up, hits the level that you would expect it to. You could close a bull call spread here after earnings, get out, get some profit. Remember, you're only doing it for a couple of days. The ratios can be insane, but the price is much cheaper, isn't it, Ty? And it's
100%. Yeah,
these are things you play over time. Yeah, ratios
exactly right. When you get used to it, because the thing is, you're placing a and I think it was Kim who actually did a spread in the room, in the options room the other day, or said he was thinking about it, where the payoff's nearly 10-1. Now, the likelihood of you getting that 10-1 payoff is going to be not probably very good, because what you're going to do, if you do get that explosive move and it gets up there, you'll probably close that trade out at maybe a 3-1 or a 4-1. That's still an awesome trade. So yeah, realistically, the 10-1 is the best case scenario, because if it goes up all that way at the time of expiry, but if it goes up there, a lot earlier, which is what you're kind of hoping for and expecting anyway, you're going to close that trade out earlier, and maybe at a 2-1 or 3-1 or 4-1 trade. So you're not always going to get the maximum, but they are very, very cheap to put on.
They are cheaper to put on, and I think the problem is implied volatility can be too high. So here was one from the analysis help, and this was on DDOG. And basically the target was 180 in terms of what he saw as resistance. The earnings obviously coming out, and he was willing to buy a call. Now, traditional, let's call it noob investor, would buy the call here and think, yeah, I'm going to make so much money. But the problem with that is that you're paying incredible premiums and you get chopped up. Whereas if you buy the spread up here or you buy a call up here, it'll be a lot cheaper. So he chose to do it that way. And if you think about it, 180 was a target. So let's go and have a look at what actually happened with DDOG. And what you'll notice is it goes and hits the 180. And at that point, obviously, you'd be like, yeah, I'm going to sell. And since then, it's declined, trying to fill that gap to the downside. Because the market gets a little bit excited. When it has like a bit of a poor time into it and it has a good earnings, it gets a little excited. We get happy, goes to the 180. And you had the opportunity to close that in the next session and be fine. So I think that's probably the story of earnings moving forward. This is, for many people, Tyron, that the first earnings they've ever seen where consistently markets have been incredibly volatile. Not only 20% upsides, 30% upsides, but also Facebook 20, 30% downsides, Amazon getting flogged both ways. This is the first one that's eye-opening people to risk. And we always talk about risk management being such an important part of it.
100%. What could possibly go wrong?
Yeah, what could possibly go wrong with a business that's growing at an astronomical rate, being valued at 1,000 PE or 200 or 300 PS ratios? Only one earnings can knock you for 30, 40%. So for many people trading hyper stocks, they never realize the downside risk once it goes out of being in the hyperactive kind of growth phase can be 30, 40% in one news event. And that's part of the reason why we like blue chips and indices so much, and sectors, is because you're less susceptible to that kind of pain. I will reiterate again also something we've been discussing here for a few weeks, and it goes back to Tyrone's concept, which is jets. And he was mentioning the turbulence and the the flight path. So what stage are we in the journey at this stage here, Ty?
Well, I think wheels are off the ground.
Wheels are off. Yep.
The seatbelt sign is still on.
Okay.
So we're still going up. We're still going up. It comes off when the seatbelt sign goes off.
Yeah. Well, is that just, is it going to be the next day?
Could be. All we need is a close above that trend line.
Yeah. Pretty much.
Seatbelt sign off. You go to the toilet. Okay. And in the olden days, you can start smoking again.
Oh, is that true? Oh, yeah. Well, what was it? Yeah. Oh, man, I can't remember what it was called. Olympic Airlines. Olympic Airlines. Just that you get on that plane. Not that I was a smoker, but you get on that plane. It was like the last cigarette plane, and they were flying around. The whole thing was just smoke.
You know what? I'm lucky that I don't remember the days when you could actually. It strikes me as unbelievable that it was ever actually allowed to happen. Imagine now if someone was smoking on a plane, like the smoke-filled cockpit. I do remember very specifically actually being on the school buses when the big year 12s, we were terrified little year 7s. And I think I'm not sure what that's called in America, but year 7, is that what do they call year 7? So year 7 is when you first go into secondary school here. I remember jumping on the bus with the big kids, and the year 12ers were all smoking at the back, and the bus just absolutely reeked of smoke. Like, it was actually making my eyes water. And it was like, and that's how it would be on a plane. Imagine being on a 20-hour flight with the cabin full of smoke.
Well, imagine when they started limiting it. So there was all the smokers went on 1 or 2 planes. My God, Olympic Airlines would have been wild. All right. So I like the base here, Ty. I still think this is a recovery-based play, obviously moving into before the reality of the American summer, before, of course, all of that stuff happens. And I think if oil also does end up pulling back, this trade could become even more of a positive towards the bull side. Big volume down the bottom. We've mentioned it for weeks now. It is outperforming the market. Now, hopefully that kind of shows a few people in the community why we do target these types of things, because we target what other people aren't looking at. And that's actually a big trick in trading. It's something we talk about in the private mentoring groups. And we want to be targeting rotation, and we want to target that idea. It's all good to say, I love Net, or I love Apple, or I love Google, but that's not what a trader does. That's an investor. An investor goes and says, I love these stocks, and then just watches them all day and buys more on the dip and does all that stuff. That's investor mindset. Nothing wrong with it.
Yeah.
But a trader moves to the instrument that is the best at that time.
The good thing about doing webinars, a very clear mind, and I can give you even more tips because I'm awake. But realistically, you shouldn't trade stocks that you love. You should invest in stocks that you love. You should trade stocks that you don't actually care about, because if you trade stocks that you love, you've got a bias there that will actually potentially influence the decision that you should or shouldn't make because you love that stock. And what I would suggest, and as a pro tip, invest in stocks that you love, trade stocks that you couldn't care less about, so you have no underlying bias.
It's a good point, Ty. That's a word of wisdom, because sometimes people love Tesla a little bit too much, and they might lose
too much,
because
and they can't bring themselves to sell it.
Yep. Is there's a chance that one day Tesla doesn't grow at the right rate for a few quarters, and it gets obliterated. And during that time, someone might be trying to buy the dip and trade it and everything. And even though they love Tesla and they're going to be correct long term, they just destroy their account because they love that stock. Correct. And that happened with some people loving on NEO and some other stocks as well, I'm sure. And a few of you out there have experienced. Has anyone experienced that? I've experienced that. I'll put my hand up. I have experienced that.
I think everybody in some way, shape, or form has experienced it. It's just something that you want to take out of your trading.
Remember when you used to love BlueScope?
Oh,
that was over a decade ago. You love BlueScope so much.
And one steel. And I see, and I had some money actually die with one steel. It actually just, when it went private again. And to rub salt into the wounds, I still see one steel trucks driving around Melbourne. Just to rub salt into the wounds.
That was the best buy ever by that business. They bought it cheap, and they made, oh my goodness. Anyway, no one else cares about our one steel story. So let's think about Jets. We should have bought one steel. So I had a question here from Thad saying you'd be waiting to still get in. Well, Thad, you basically could have scaled into this position already. So here is the double bottom. This is where actually I got excited about it. So I put in a third order here. Now, you could have actually put in another third here, depending on your trade style. Again, you'd have to probably do the mentoring to get to that point. But yeah, you could have gone a third there, and then this is your final component. Now, this usually doesn't happen. The idea is it would be here into the break, and you would scale in. With these sectors, I like to scale. So yes, today is like a marginal. I would wait for a little bit of a tip and then probably enter another third. And then when the close happens, enter the final third. If I miss this one down here. But that's the way I approach it. It's a different type of market process. It's a longer multi-month kind of concept usually. In this one, I don't know, Jets seems to have a good February, and then it drops off seasonality wise in March. So I'll be watching the price action very cleanly. But yeah, that's the general idea. As long as it beats the market as well, I'm happy with that. So we'll find out.
Yeah, that's awesome.
Ginny kind of says yes, it's up to her. Yep.
Don't fall in love with stocks only your girlfriend. Jess says.
Jess must be feeling all loved up because of Valentine's Day. So there you go.
But Jess, what if you've got a wife? Do you have to have a girlfriend to actually love somebody as well, or are you allowed to love them?
You gotta love the wife.
Just out of curiosity. I'd like to think so, but he's very specific.
Oh, that's right. He's not married yet. It's all good. Russell Waite says, I've stopped trying to short companies. I hate looking at you, John Deere. Need to learn that about companies I love now. Always learning. Yeah. So, yeah, John Deere. Yeah, shorting companies is quite difficult, and it's not, and it's more of an advanced technique. Buying bases, buying accumulation, knowing that markets are inherently long is much easier, and that's partially why I think that, they always say 95% of traders lose and 5% are successful. I think in the stock market, a lot more than 95% of traders, a lot more than 5% are successful. I think that in the
way
stock
more.
market, it's more like 20 to 25% can be successful. Whereas in Forex, I would say that's probably a fair stat.
if those stats were true in the stock market, there wouldn't be a stock market to trade.
No,
in truth. Yeah, that's just how it is. I know in currency it can be a bit like that, but I can guarantee you 95% of those people who are losing are trading $1,000 accounts like they're $100,000. Taking massive risk. And that's just the nature of the beast. But in the stock market, there's no way those stats are right.
Got a question coming in, TA on Nvidia. Yeah, we can do that. So Nvidia is not really TAable though. I'll tell you why. Earnings. So I'll show you the TA, and it's here. You've got the rejection in terms of the trend line. You've obviously got the market bulling up here ahead of earnings, getting positive. You've got previous support, resistance. And if the earnings knocks it out of the park, I mean, this could be another one that really flies back up to like maybe a $300 target. This will be a big deal. I mean, it's at effectively resistance coming into earnings. I think it's at the close, so it's after hours. So we kind of expect it to hover around this zone, if not maybe even find a little bit of weakness if some people want to take profit. That's the trend line. This is the level. If it breaches past this point, you'd have to think the market's going bullish as well, because it's a big stock. Like, this thing's worth $662 billion. So breach of this is pushing to the 300. That's what I think anyway.
Yeah, I agree.
Yeah, Tyron will be with that one, I'd say. Garrett, thank you very much. And Ginny says that she has had that experience, unfortunately, holding and trading things like PLTR and some other stuff. Well, PLTR will be coming out. When's its earnings? It's tomorrow morning. On a Thursday morning. Yeah, that's going to be interesting. Interesting to say the least. So these are all the after hours moves, Ty. We've got UPST up 137, 26%. We've got Roblox sitting at around negative 13.37. So that's the negative side, and Airbnb still holding fine. We've got the S&P 500 trapped in a range. Remember, we're looking for confirmation. Either way, we're neutralized on this market at the moment. We have to leave our opinions at the door. There's nothing else we can do. And when we go over to the crypto market, we look at things like Ethereum. We look at things like Bitcoin. They've got nice bases forming, or that have formed. We obviously went bullish in terms of sentiment on them yesterday. That's what we thought. And I think with these crypto markets is they are showing signs of really turning around. And once we see Ethereum break this peak, and more importantly, Bitcoin, which is the more important one over here, because we need Bitcoin to break its peak over here. If Bitcoin can break past 46,000, Ty, I believe that the crypto is back in the boom. And the reason why is everything points to that. You've got the break of the downward trend. You've got this significant pickup to previous huge support. That's becoming resistance. And if we breach past this, we're going, I think, to 52,000 for Bitcoin. And then on top of that, every other one of these coins that's been struggling will be properly double bottoming. And this kind of pattern is everywhere in the alt market. So they're all the same. They all show double bottoms. They're all kind of recovering, but not enough. I think once these double bottoms come through to play on Polkadot, on ADA, on Matic, it really doesn't matter which coin we're looking at, on Solana, all of these big breakouts will only happen if Bitcoin's able to get through 46. Your thoughts?
Yeah, no, 100% agree. You're right. They're very dependent on it, even though people don't want to admit that they're dependent on it.
They don't. People still don't admit that it's all about the Bitcoin and the Ethereum.
Yeah, I know.
It's all about
it's amazing,
that.
really.
And the bigger profit is here, sure, but only when that big one does the thing. It's the index, guys.
I think they call it not seeing the forest for the trees. That's pretty much what that is. Not understanding the real market.
Yeah, it's a little unfortunate there, but yeah. So watch out for the S&P 500. We'll leave you with the closing thoughts of watch out for the S&P 500. We think that that's going to be the big story of the next 24 hours based on what we're seeing here. The stocks will do their thing based on that. Earnings, obviously, we've talked about a play. I'd probably go back and rewatch that. If you haven't been using that kind of technique, you probably should consider it if that's the way you like to, if you like to trade earnings for huge booms. And the rest of the stocks have been great today in terms of percentages, especially our hyper stocks. But you've just got to remember that it all changes very quickly. So if that S&P 500 cracks to the low, it could be all red. And that's the type of volatility that we're in right now.
Can we just have a quick look at WOW on the Australian market for Dave?
Woolworths.
Yeah. He just wants to know how they usually trade around earnings.
Well, Woolworths doesn't really trade a certain way towards earnings. I mean, if you think about it, there's no rhyme nor reason to how they trade around earnings.
Yeah, it's a defensive too, Dave. You got to remember that Coles and Woolworths, for that matter, they are defensive stocks. So, I mean, like I'm seeing a steadying of the price around this level here, around that sort of 33 area. We had a very sharp and aggressive fall, but this is the level where, if it's going to find support, this is the place it's going to be. And earnings certainly aren't going to do it any harm, because at the end of the day, earnings means dividends, and they've always got a healthy dividend.
Yeah. So earnings in 8 days. Dividend should be okay and on relative target. I doubt they've done really too poorly. I think the problem is they're coming off that sugar rush of everyone going and buying toilet paper and drinking
exactly
inside.
And that was always going to happen. That was always going to happen. But look, this is a very obvious trade in my mind. A close above that previous high there, a close above the 20 moving average. We call that happy days.
Yep. And we'll be looking at this. This will be
absolutely
a 100% for us. I mean, don't worry. We
a close
have
above there. A close above there. That's a double bottom at support. Closing above the key resistance, and you got a lightning bolt on the way up. There's only one thing that you can do there, and it's not sell.
Yeah.
But this is this stream is not financial advice.
37 would be the kind of target price action that we'd be looking at as well. So look, it's a good one. We are looking at, like, we're definitely looking at it. We're obviously going to probably be chilling here until the earnings, because it's probably going to go up to the resistance into earnings. I'd say there is a bit of hype and anticipation on the stock, goes towards a resistance or a support, usually ahead of something. 8 days away, maybe it will rally. But yeah, it's a good pickup, and it's just another one of those ones that we find all around. So I think that probably brings us to an end here, Ty. We've talked about the crypto markets, the indices, the stocks, obviously the commodities and the Forex markets. Yen's on the Forex market, gold on the commodities at this stage still looks good. And on the indices, S&P 500 is the big teller. And then on the cryptos, just look at Bitcoin, and maybe trade Ethereum in light of Bitcoin to get a higher percentage, which is what we kind of went with yesterday, and it's worked out so far. Anything else you want to announce, Ty, before we finish it up?
That is all good. Thank you so much for joining us, everyone. It seems that everyone's very happy with this time slot down here. Look, we're going to have to mix it up. We will mix it up a little bit, but I think we'll probably we'll just wait for the people's comments to come in and see what they're loving time-wise. Q&A tomorrow, though. It's an open Q&A for everybody. So the public Q&A tomorrow is around the same time, about 9:15 a.m. So the link will be in the Discord room. I'll put it into the public room as well. So it's a public Q&A tomorrow. So I look forward to seeing you there. And let's see if we can finish the week as strong as the front of the week was for scalping, because I think there's some really good opportunities to get in on a lot of these trades.
All right. Thank you so much. And we'll see you in the next one. I think we have gold versus yen from Dave, and he said he liked that a lot. Yeah, that was a pretty strong trade. So just because we're talking about gold versus US here, remember, go look at gold versus other currencies. Like we mentioned, and I was talking with Chris about this, and he said, oh, have you looked at gold yen? And I looked at it and I went, absolutely, that's the one right now, because this is, I missed the bottom here, unfortunately, because I wasn't looking at enough crosses. But when you are looking at crosses, in general, look for the weakest currency, trade your strongest commodity against that. So in that case, it was this, and it's done quite well. Thanks so much. We'll see you later. And of course, remember to subscribe and like the video if you can. See you for now. Bye.
Thanks, everyone. See ya.